Yesterday we have the SEC sue Binance, and now today, who are they going after? Coinbase. So needless to say, this is an important video, so be sure to watch it till the end. We're going to go through a lot of valuable, important information in this video. So like I said, the SEC sues crypto platform Coinbase one day after suing Binance. They are accusing the largest U.S. crypto platform of operating illegally because it failed to register as an exchange. It's getting so old. They say the same thing and set up the same goddamn roadblocks. The lawsuit is the SEC's second in 2 days against a major crypto exchange following its case against Binance, the world's largest cryptocurrency exchange founded by CZ. Both civil cases are part of SEC Chair Gary Gensler's push to assert jurisdiction over crypto markets, which he on Tuesday again labeled a wild west of investing. And protect investors. Protect us. Oh, thank you, Gary. Oh, please, Gary, thank you so much. Where can I send you Christmas and birthday presents? Thank you for protecting us. Come on. To protect investors while shoring up their trust in capital markets. Trust, because it's something we have so much with capital markets and banks and the Fed and the government. We have so much trust. Oh, if only crypto could have as much trust as that. Get real, bud. The crypto markets are undermining that trust, and I would say this: it undermines our overall capital markets. Cool, Gary. Cool. Please run for president. You're the only one we can trust. I mean, what are our tiny little stupid human minds? How would we ever know what to do without you, Gary? Crypto companies, including Coinbase, have said SEC rules are unclear, and the regulator is overreaching by asserting oversight of their industry. I think Coinbase is being light about that statement. The SEC is straight up trying to control, power, wrestle down, dominate this industry. And it is obvious as hell. But never mind, excuse me. They're protecting us, ladies and gentlemen. Paul Grewal, Coinbase's general counsel, in a statement said that the company will continue operating as usual and has a demonstrated commitment to compliance. 10 U.S. states, led by California, are also accusing Coinbase of securities law violations concerning its staking rewards program. These states don't understand how these staking programs work. They are unlike anything they have ever seen before. They're not just shelling out money. These are coins staked in protocols to run the networks and secure the networks. These states, these officials, these regulators do not understand what the fuck is happening. They need an education. And in the meantime, we're going to deal with their arrows and slings and abuse and punches until they eventually figure it out. But don't worry, U.S. The rest of the world is moving along, making progress. Even Hong Kong now has cryptos that people can buy and sell that are labeled okay. They're even making ETFs for Hong Kong. China, who's banned Bitcoin forever. Here we are, U.S. We're just falling behind. What are we going to do about this? This is absolute absurdity. You've heard it before. Let's move back to the article. Hit that subscribe button if you haven't. Of course, stock shares are down. At the time of them writing this, 11%. I think I saw them even down 15% at one time. Down about $6.50 to about $50. Coinbase customers withdrew more than 57 million within a couple hours of the SEC filing. There's nothing new. We knew that to expect. We knew to expect that. Binance had a big withdrawal yesterday. Of course, Coinbase is going to have a big withdrawal. But you know what? They're not FTX. They're not fucking Celsius. They actually have balanced books. Oh, and let me remind you, they are a publicly traded company. They are as compliant as could possibly be. They're just getting abused. Write your Congress people. Tell them to fuck right off. Here's this chart that's important to look at. So Binance and Coinbase collectively account for nearly 60% of crypto transactions in May. They were both sued by the SEC for allegedly violating security rules. Just because you get sued, just because they claim things, doesn't mean they're true. That's why they go to court. But they do it because it's an abuse of the actual legal system. So here's the volume that they have. Binance is the more orange color. Coinbase is the lighter color at the top. These all look like a bunch of cigarettes to me. You can see that volume ever since January has just been going up, up, up. January of 22, up, 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 up. Getting up to a peak of what looks like almost 70%. So 60% in May, that seems about right. I think that they're both going to still stay above 50%. So the SEC wanted to say these 13 crypto assets. Check this out. Don't go anywhere. Be sure to keep watching this. In its complaint filed in Manhattan federal court, the SEC said Coinbase has since at least 2019 made billions of dollars by operating as a middleman on crypto transactions while evading disclosure requirements meant to protect investors. The SEC said Coinbase traded at least 13 crypto assets that are securities that should have been registered, including tokens such as Solana, Cardano, and Polygon. If you're going to pick some coins, why would you pick those ones? Those ones are staked into protocols to operate and secure the network. And they're actually used, these ones are much more like commodities because they are used to process transactions. When you do a transaction on Solana or Cardano or Polygon, you have to use that coin to pay the gas fee. Oh, gas, oil. Wait, what is that? Something that you use to do something? Oh, that's a commodity, Gary. So just to give a little history on Coinbase, Reuters puts this in here. This is actually important to look at, in my opinion. Founded in 2012, right? So just over a decade now. It recently served more than 108 million customers and ended March with 130 billion of customer crypto assets and funds on its balance sheet. Transactions generated 75% of its 3.15 billion of net revenue last year. Remember back up there how $57 million got withdrawn after the announcement? I'm still sure there's more coming out today, but look at what that is. That's a drop in the bucket. They got 130 billion of assets on there. They made over 3 billion last year in 22. Imagine what they made in 21 and 20. Now, as for the staking rewards program, the SEC is making a stink about the staking program because they're jealous. Them and their bankster buddies are jealous that we are able, and Coinbase is able, to actually use this staking protocol and generate revenue because you know what it's a threat to? It's a threat to treasury bonds and the money market funds, right? Everything right now, right, you can get maybe 5% on a short-term treasury bond, maybe even about 5% in a money market fund. These are threats to the current financial system. That's why all of this is going on. Not because to protect the public is to protect the status quo, to protect their bankster buddies, to protect themselves, to protect the system that serves them so well. But you already know that. You're not dumb. So in the staking rewards program, which has at least 3.5 million customers, Coinbase pools crypto assets and uses them to support activity on the blockchain network in exchange for rewards it provides customers after taking a commission for itself. The states focused on this program also include Alabama, Illinois, Kentucky, Maryland, New Jersey, South Carolina, Vermont, Washington, and Wisconsin. New Jersey fined Coinbase $5 million for selling unregistered securities, which they can just willy-nilly do without any grounds for shit. So if you live in one of these states, please reach out to your congressperson. It's easy. It's easy. Just Google how to reach out to my congressperson in state, in Kentucky, in Illinois, in Alabama, in Maryland, in New Jersey, Carolina, Vermont, Washington, Wisconsin. Let them know that they can fuck right off and to quit screwing you. To quit pinning you and enslaving you in their fucking system. Can't ignore the rules. Tuesday's SEC lawsuit seeks civil fines, the recouping of ill-gotten gains and injunctive relief. What in the fuck is that even? What is this? Could you be more vague and ridiculous? The SEC had warned Coinbase in March that charges might be coming, right? Y'all remember the Wells notice? You simply can't ignore the rules because you didn't like them or because you'd prefer different ones, said Chief Gary Gensler said in a statement. That's not what happened. That's not what's going on. You guys suck. You're just fighting everything. Let me reiterate. Hong Kong, China is allowing this shit now. In the US, we are so far behind. It is ridiculous. Why? Because we're the world reserve currency. Because we have the most to lose by anything that opposes the financial system. Not to mention, we also have this de-dollarization happening. BRICS nations, other countries trying to get themselves wean off of the dollar, right? So there's a lot of pressure coming on the dollar and its financial system. And they're just fighting it every which way they can. The easiest fight is to fight within. It's much harder to fight the BRICS nations when you can just stop people from within your own country by having an exit to get out of your system. And crypto is the exit to this bullshit system. If it wasn't, they wouldn't be doing anything because they're not here to protect you. You know that. Gensler's crackdown has prompted the industry to boost compliance. Tell us clearly what to do, Gary. How do we do this? That's what we've been saying forever. Shelve products and expand outside the country. Kristen Smith, CEO of Blockchain Association Trade Group, rejected Gensler's efforts to oversee the industry. Thanks, Kristen. We're confident the courts will prove Gensler wrong in due time. As long as it's a truly fair system. Is it? In the Binance case, the SEC accused that exchange of inflating trading volumes, diverting customer funds, improperly commingling assets, failing to keep wealthy U.S. customers off its platform, and misleading customers about its controls. Some of that may be true. Some of that may be true. The one that's definitely true is this one, keeping wealthy U.S. customers off its platform like it was supposed to via U.S. regulations. But this isn't hurting anybody. This is letting people do what they want to do with their own money. These other ones, those are maybe somewhat concerning. I really hope those aren't true. But again, as I preach, and so does anyone that's been around for a while, don't leave your shit on exchanges. I have some on exchanges, but a very small amount, an amount that I'm willing to lose. And it's what I trade with. Like I trade over on MEXC. Maybe there's a link down below this video here. Like I trade. So I have like 3% of my crypto in there, right? It's an amount that's not going to kill me at all. It's just silly. And I use a ledger. I know there's been some FUD going on about ledger. I still feel good with them, but you should have some kind of hardware wallet, whatever you want to use, but do your research. And Binance, of course, is pledged to defend vigorously against the lawsuit and said that the case reflected the SEC's misguided and conscious refusal to provide clarity and guidance to the crypto industry, which is, ding, 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 true. Coinbase's friction with Gensler dates to 2021, when the SEC threatened to sue if Coinbase were to let users earn interest by lending digital assets. The company scrapped the idea. Why would they do that? Why would the SEC do that? Why would they do that? To protect the consumer? Wait, I can get interest on my money in a 0% interest rate environment that's been like that for a decade in treasury bills in the greater financial system? I can actually take some of my money, put it in crypto, and now I get interest. And that's when Gensler's like, and the banksters, et cetera, are like, whoa, 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 whoa. This is making us look bad. Shut it down. Straight up. If you don't think it's that, then you're not paying attention. But you're smart. You're watching this. I guarantee you see what's going on. The case, look at this. The case is in the U.S. District Court, Southern District of New York. Woof. What else is in New York? What has heavy ass influence in New York? Wall Street. The financial capital of the world, the dollar capital of the world, this financial system capital of the world. Oh, yes, please. Can I please have the lawsuit in the least, in the most biased imaginable place in the effing world? Oh, thank you. It's a rigged system. You know it. Hit that subscribe button. To me, this is just We all saw this coming. They got that Wells notice months ago. We knew that they were going to make this move. It's got to be done. But the good thing is once it's over, it's over. And this is going to give us clarity. This is going to start forming some regulation, because we do need regulation. In order for crypto to really grow to the masses, we need to fight these battles. They were always going to come, and there will be more battles to come. But crypto, Bitcoin, etc. will continue to prevail, but we may evolve or adapt based on what is going on, based on what we need to do. Hopefully, they don't get to just completely remold us to just be another abomination of their financial system, because their financial system is an abomination. Let me be clear about that. Hit the sub. Be well.